Hello, and good morning, everyone. Hope you're doing well. It's Dada from TradeGuardian. On today's one, we're going to continue about having a strategy, having and knowing a strategy. So let's start from the beginning. Most of you need to have a strategy which suits your lifestyle. It really depends on how much time do you actually have on your hands. And let's say average person has a day job, so they don't really have much time. And really, that probably makes most of us because we still all are struggling for time in today's society. Now, this strategy I'm going to introduce you today does not require much time at all, and which is why it's so brilliant in itself, in its nature. In front of you is a 4-hour chart. It can be any currency pair, but in this case it's just euro, US dollar, but it doesn't really matter. So 4-hour chart means that each of these candlesticks is a 4-hour long trading session. So really, if you're trading on a 4-hour chart, then you would need to check your chart only once every 4 hours. Let's face it, not many, absolutely not many hours, and each time, not many hours required for your trading. Each time you check a chart or even place an order, it only takes up to 5 minutes. First 3 minutes to make a decision, another minute to place an order, and then you can go away and do what you want for the rest of 4 hours without even concerning yourself about trading. Right? Now, what is this strategy? Well, it involves 4-hour charts to start with, and in our previous videos, please do catch up if you haven't seen them. We discussed these moving averages, these lines on your screen. They are exponential moving averages. They are a classic of 200, 150, and 20 period moving averages. And we said that if they are all looking up, like they are here, then we're only looking to buy. Let's recap. All the moving averages looking up, like right now, then you are looking to only buy. The market is going up. That's rule number one. Rule number two, you only buy on a strong candle. Remember, a strong candle is probably this one on our chart, is the strongest. So let's say every 4 hours, you can easily check your chart even from a mobile phone. So, not a big deal at all. So you check your charts every 4 hours, and whenever you come across strong candles, you buy them. So, for instance, if you check this one, you would have bought this. This morning, I've just realized I saw this one and I bought it. You can see there's a buying line going on there, and that's my stop loss below it. So here we come to the rules, final rules. So rule number one, all the moving averages are looking up like they are doing here. And we are on a 4-hourly chart. Each candle represents a 4-hour session of trading. Second rule, now we know we're only buying. Second rule becomes we buy on a strong candle. Let's see. Here we wouldn't have bought anything because all these moving averages are looking down, right? So, and the price is still above the main moving average, which is 200. So it's basically confusion. Nothing there to buy. But this is brilliant for buying because all of those moving averages are quite extremely looking up, and the price is above them, right? And a strong candle would have been here. Even this would have been a strong candle when you compare it to other average size of all the other candles. And like I said, I just bought this because I saw this strong candle. And I bought it there, and the stop loss went just underneath that candle. And this is where we're getting into stop losses. which is very important. Now, to protect your trade, you require a stop loss. Otherwise, your trade is completely unprotected and you might just lose all of your account in one go. Happens all the time. So, rule number 2 was find a strong candle. Now, stop loss, if I bought this here, let's put a line in. I saw this candle and I bought it there. My stop loss would have gone underneath the very same candle. And my take profit would have been the same distance, if not more, higher than that candle. So 1-to-1 ratio. But you can take a lot more profit if you wanted to, if you're patient enough to wait for it to reach the ultimate target, then you'll probably have ratios like 1-to-4 easily, or 1-to-3 commonly, or 1-to-2 regularly, and so on. Okay, let's recap this. Let me get rid of these lines. We don't need them anymore. So, rules. All the moving averages are looking up, like here, and we see a big candle like this, like this, like this, or even this one. Stop loss, see, I saw this one, so it's a good example, and I bought it right there where the green line is. My stop loss is the red line, underneath the same candle. Stop loss goes under the candle you are buying. Or, if the opposite, then you might be selling. Hope this helps. Hope it is clear enough. Please don't hesitate. Leave a comment and we'll carry on to part 3 very, very soon. Have a great trading session. Bye-bye.